joins us now live from our Sydney CBD studio. Just firstly, those near-term moves, what did you make of them overnight, Peter?
Well, good afternoon, James. Yeah, look, quite surprised everyone. Volumes were down about 61% down, but the movement was very, very strong, up around about 1.7%, James. So we saw those highs taken. I think it'll probably push higher from here. Brent was up well. Naturally, WTI, it's about a $2.19 premium for Brent to WTI at the moment. And I think overall, trade's a little bit, light on. Many traders are away, James. But the more important thing is I think there's more push there to the upside.
To what sort of level, what would you expect to be sort of the top side of the trading range?
Well, I think when you're looking at Brent, many analysts are saying between $60 and $70. Naturally, the Venezuelan oil minister, and they all want that sort of number, are trying to talk the market up. Hedge funds are in a bullish position at the moment, and they're very, very active in the market. So when you take on board, and the outlier is going to be, as your previous graph was, what happens to the rig count? We're producing record numbers as far as oil coming out of only a third of the rigs compared to where we were 2 years ago, James. So all those guys are sitting on the sidelines and they could enter the market shortly.
What point do you think that kicks in particular, the US shale guys?
Well, you know what? A couple of years ago, James, they were making $60 a barrel for the shale guys. That's what they needed to, retrieve oil at. They've cut their cost dramatically, new technologies and innovation. They're down around that early $40. So What's going to happen, I think, as WTI pushes higher, you're going to see all these guys leave jobs. They could be driving trucks or at Home Depot, and all of a sudden they'll re-enter, and they're very flexible workforce.
How quickly can they get production going on a rig that maybe has been mothballed? How quickly can they get it pumping again?
Well, the turnaround time's pretty quick. You're talking 4 to 6 weeks.
Wow.
And the other side of it, which is quite exciting, is that as these rigs, and they've sat dormant for a little while, they can move very, very quickly, and we've got a very strong workforce that can enter that and really turn it around. And this is the key advantage that they have. So as prices move higher, we're talking about 4.5 million barrels a day at the moment, and that could quite easily ramp another 500,000 in there. So that's the outlier.
What do you think that then means for OPEC and their targets around 65 through 2017?
You know what? It's going to be hard because we've also got the Saudi Aramco float, and that's the largest IPO in the world. That'll come on about the next year to year and a half. So if the prices get crimped to the upside with those drillers coming on board from the US, then that's really going to cause a lot of confusion to the market. The OPEC and non-OPEC producers, it's all about compliance. One says, well, we'll cut 400,000 and so on. So they've all got to stay on those targets, and that's the real issue, compliance, James.
And how likely is it that they're actually going to all be pulling together?
Well, you know what? It hasn't really happened that successfully over the last, 20 to 30 years, so that's the issue at the moment. I've got a little bit of a laugh on I'm feeling I honestly want to see it move and do it properly, and they all sit around a table, but the real sense of the matter is many of the different ministers are saying that compliance is the key framework, and if you've got sides that aren't prepared to act accordingly, then the whole thing could fall as a deck of cards.
Yeah. I want to get your thoughts on some other commodities, in particular base metals in 2017. And I appreciate it's a pretty broad church, but a couple of the guys we've been speaking through the back half of this year said, look, if 2016 was about the bulks, they reckon 2017 the trade is going to be amongst some of the base metals.
You bet. Copper, I think lead, nickel, tin, all of those. Coke and coal, as you know, had a record run up. So did iron ore. But I think those base metals will do very, very well. And also the Shanghai Futures Exchange. Retail investors are just, jumping all over it. We've got record number as far as trade in November for a number of the base metals. And there's a large appetite. We know that China and stimulus is really, front and centre. They're not going to take their hand off the wheel. So I think that you're going to see a continued uplift for a number of those base metals, which will do well for our, miners.
Just on the futures market over in China and this move in by retail investors, how big an influencer do you think it's going to be for a lot of commodity prices?
Well, I think it'll be we've got to understand that by nature, futures markets do attract speculators and hedges. So in turn, people, and that's what drives a market, and it gives a market liquidity. There are more people. They've raised the margin requirements for a lot of these retail investors, but they've got a large appetite. They see price swings, and they've got a very large, I suppose, understanding, because they can see the fundamental change across China and the world's appetite. Now, with Trump coming on board, I think it's going to add even more stimulus, and more, I suppose, infrastructure globally is on the uptick.
And that's got to be good news for us. Peter McGuire, great to talk as always. Thank you.
Thank you, James.